You're welcome to the second part of Business Africa here on Africanews. The coronavirus pandemic continues to claim human, financial and economic victims. This is the case of Nigeria, which is going to reduce its operating budget for this year. The current crisis caused by the drop in oil prices could lead to other consequences, including a recession and a devaluation of the Naira, the national currency. Ignatius Anor and Jean-David Nihamle have the details.
Nigeria, the continent's main gold producer and Africa's largest oil-dependent economy, could be well hit hard by the pandemic in 2020. The Finance Minister Zainab Ahmed announced Monday that the government would revise its budget downwards following the sharp fall in world oil prices. She said it is very clear that the nation must review the reference price of crude oil, which had been set at $57 a barrel. Ahmed added the consequence is that there will be a drop in revenue in the budget, which means a reduction in the size of the budget. Last month, the International Monetary Fund lowered its 2020 growth forecast to 2% due to lower oil prices. For now, Nigeria is still dependent on oil, which generates 90% of its income. Some analysts argue the country has not learned from its lessons of the past in terms of diversifying its revenue base. Many even fear a devaluation of the national currency, but the central bank is working to avoid this outcome. The country's foreign exchange reserves, estimated at $36 million, have not yet reached the critical threshold of $30 million, according to Godwin Emefiele, governor of the central bank.
Algeria, another victim of the COVID-19 pandemic, wants to face the fall in oil prices. Algiers has put in place a policy aimed at reducing public spending, minus 30% in the state's operating budget. These measures aim to protect the country's economy, while the fall in the price of black gold has a huge impact on producing countries. Claudia Sono and Chancellor Ningi with more. The coronavirus pandemic has weakened the oil market for months now. Faced with this health storm, oil-producing and exporting countries asked for a new drop in the production of black gold on March 6th. But against all expectations, Moscow refused to budge over fears of losing market shares to gas producers. In Africa, Algeria has adopted a set of corrective measures to cope with the rising cost of exportation. The country decided to curb public spending and review its economic policy in the face of the collapse in oil prices. Oil giant Sonatrach, the country's largest public enterprise, will therefore have to respond to this urgent measure. According to a statement from the presidency, the company will have to reduce operating and capital expenditure from $14 to $7 billion in order to preserve foreign exchange reserves. And that does it for this edition of Business Africa. Thanks for watching. Kindly follow us on social media at Africanews and Africanews FR in French. Enjoy the rest of your viewing and goodbye.
À très vite.